It's a global phenomenon. Unless you're extremely wealthy, you feel the effects of this inflation that every single government, regardless of whether they're, completely communist on one side or capitalist on the other, everybody does the same thing. We're all in this sort of fiat debasement boat together. And Bitcoin has been this shining light, which has been the best performing asset in human history since it launched in 2009. And so I think that this has been a great ride. And obviously it's still early, for people to get involved in this industry. I wouldn't say that just because you're coming in at 2025 and Bitcoin's at 120,000 or whatever it is, that you've missed the boat. We still have a long way to go.
Arthur Hayes doesn't mince words. Housing eats up most of people's income, no matter where you live or what system you're under. Communist, capitalist, it's the same fiat game. Money gets debased and the average person falls behind. Unless you're rich, you feel it every month. That's why Bitcoin stands out. Since 2009, it's been the best performing asset in history. Hayes says even if Bitcoin trades at $120,000 in 2025, it's not too late. The story is still unfolding and there's plenty of room ahead. Where things get tricky is the federal markets are leaning toward cuts. Trump is openly pushing for cuts. Some Fed officials and nominees echo the same line. But Powell is caught in the middle, framed as a Volcker 2.0 who must restore credibility to an independent federal. The catch: he's still human. Imagine being pressured publicly by the president, then having to decide on the world's biggest stage whether to cave. Hayes thinks Powell's pride could matter more than the data. If markets say cut, but Powell wants to show independence, he might hold rates steady around his so-called neutral zone of 4.25 to 4.5%. It would let him prove he's not Trump's puppet. That Friday speech could be pivotal, because it will reveal whether Powell bends or digs in. Longer term, Hayes is blunt. Yes, the Fed will eventually cut, whether Powell does it or his replacement. However, the real printing storm is expected to occur after 2026. That's when the floodgates open. And when that happens, Hayes believes Bitcoin won't just rally, it'll hit levels people today can't even imagine. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
My main thesis, and this is basically all that I write about, is money printing, right? And the different ways in which the authorities around the world try to hide it from people and try to gaslight you about why it's not happening, and trying to make it seem like it's okay that a house costs 75% of your disposable income and all these sorts of things all around the world. And so I think it's a global phenomenon. Unless you're extremely wealthy, you feel the effects of this inflation that every single government, regardless of whether they're completely communist on one side or capitalist on the other, everybody does the same thing. We're all in this sort of fiat debasement boat together. And Bitcoin has been this shining light, which has been the best performing asset in human history since it launched in 2009. And so I think that this has been a great ride. And obviously it's still early, for people to get involved in this industry. I wouldn't say that just because you're coming in at 2025 and Bitcoin's at 120,000 or whatever it is, that you've missed the boat. We still have a long way to go. It's be very interesting to see what Powell comes out with, because everybody's saying the Fed should cut. You have Trump chirping on him. You have these shadow wannabe Fed governors. Some of them are on the board. Some of them are proposed nominees. And supposedly Powell is this Volcker 2.0 type figure who's supposed to inject some credibility back into the Fed of this, nonpartisan, which is bullshit, non-money printing organization. And so he's got this situation. And on one side, there's an argument saying, okay, there's a labor market. There's all these sort of statistics you can roll out saying this is why the Fed is being too restrictive. But on the other hand, and this is what not that I have a probability weighting between the two, you have human nature, right? And you basically have this person who's been vilified for good and bad reasons in the press by his ultimate boss, the president of supposedly an independent organization. Does he get up there on Friday and say, oh yeah, sure, I cave. We're going to cut 50 basis points on September, 17th or 18th? Like, as a human being, as a man, how does that feel to just be completely bitched out and then you have to capitulate on the biggest stage in the world? So I think there's a high probability that while, probably ultimately the Fed will cut at some point, whether it's Powell or whoever else replaces him or whatever, maybe Trump fires him or whatever it happens over the next year. But I think there's a high likelihood that Powell sticks it out and just says, fuck you to Trump and doesn't cut, just because he's a human, and human beings don't like to be put in these sort of situations. And I've been having this argument with a lot of very senior and prominent macro writers who, put all these reasons why Powell has to cut, and why his job is so uncomfortable, being sort of the foil at which Trump launches all these tirades against. But at the same time, what a better way to prove that you are an independent monetary actor than to say, no, I'm sticking with my guns. I think that 4.25 to 4.5% Fed funds is neutral, and fuck you, Trump. And because I'm Jerome Powell, I'm an independent head of the Fed. So I think there's that continuum. I don't know where it's going to come out. It ultimately doesn't matter. But I guess if you're a trader, then obviously this is a very important speech he'll give on Friday. I don't want to overtrade. Obviously, everyone falls victim to that of sometime trying to take 5 or 10% off the markets. I'm going to buy back in, but you just end up paying more fees to your brokers. And I'm just going to sit back. And Powell comes out and says, I'm not raising, or doesn't talk about cuts at all, and market tanks 15-20%. I've got some extra cash, and I'll be going shopping on some things that I think are cheap, just because I think that Trump and Besson are just setting up such a perfect situation for how money is going to be printed post 2026 in May. And I guess listen to a CNBC interview with Zarvos, one of the Fed chair hopefuls, and if that guy gets in, Bitcoin will be at 15 million, because he's just going to do yield curve control, printing money, immediate 300 basis point cuts, all sorts of things. So I think Trump and Besson have laid out exactly what they want to do: run it hot, inflationary, all these sorts of things. Powell is the only thing standing in their way. And, come hell or high water, Trump will get what he wants. The question is, how difficult is it, whether he has to fire Powell, or, there's just ways to do it.
Arthur Hayes argues that a properly structured stablecoin would be far more secure than the eurodollar system investors have relied on for decades. In his view, the mechanics are straightforward. The dollars would either remain on deposit at a U.S. bank or be backed directly by Treasury securities. That provides investors with absolute protection, plus a yield. Unlike eurodollar deposits, which often yield almost nothing, the stakes are enormous. Hayes points out that the eurodollar market holds between $10 and $13 trillion. If even a fraction of that money were to migrate into stable coins, the United States would suddenly regain visibility and control over global dollar flows that currently operate offshore and outside the Fed's line of sight. Stable coins also create a unique policy lever. Hayes notes that BISET, or any entity managing such a system, could offer yields below the Fed funds rate and still attract investors. For example, if the Fed funds rate were 4.5%, a 6-month treasury offered through a stable coin could yield just 2%. Investors would still take the deal because the alternative, keeping money in foreign bank deposits, carries more risk and pays even less. In that sense, stablecoins could become a powerful tool for shaping short-term rates independently of the Federal. Hayes' point is blunt. With the proper structure, stablecoins don't just compete with eurodollars, they make them obsolete, while pulling trillions of dollars back under the watchful eye of U.S. regulators. Let's get back to the interview.
Retail deposits. There's two pools of money, which I think best via monetary policy and aggressive use of terrorizing sanctions can make people on board in the stable coins. The first is the eurodollar market, right? So, 1950s and 60s, eurodollar market was created because of all the regulations and prohibitions around interest payments and trade flows that the U.S. Monetary authorities were putting on commercial banks. And so you had these foreign branches of U.S. banks and foreign banks saying, hey, I'll take your dollars outside of U.S. control. And so we have this $10 to $13 trillion market, which nobody has any control over, oftentimes influences Fed and Treasury policy in terms of when dollars become expensive and cheap in the eurodollar market. And you can probably trace almost every financial crisis outside of the United States to eurodollar market flows. And these flows are not doing what Besant wants them to do. He can't control them. He doesn't know where they are. And he can't make them buy what he wants, which is Treasury bills. So my idea, and maybe he'll do this or maybe he won't, I don't know, is right now, why do you feel comfortable in a eurodollar? Because every time your banking institution has gotten into trouble, the Fed, the Treasury bails you out, even if technically they shouldn't be doing it so, because you're not a member of the discount window, don't follow U.S. regulations. But we can point to many, even 2008, the Fed secretly bailed out all these foreign branches of banks for all their bad trading policies to make sure the eurodollar depositor was sweet. So the first thing Besant should do is say, hey, guess what? If you don't have your money in a US branch of a bank or a US bank inside of America, you do not have a guarantee any longer. We will not come and save you anymore. So all of a sudden, these dollars like, oh, okay, well, there isn't this blanket government guarantee from the Fed and the Treasury for these trillions of dollars that I have deposited on these banks. But I could put my money into a stable coin. And a stable coin means that the dollars are either a deposit at a US branch of a bank in America or they're holding treasury bills. So if you don't feel safe in your Deutsche Bank account in Switzerland or wherever, just talk to your authorized participant and move these deposits over to a stable coin. And now you have access to your dollars. You have the blanket guarantee of the US government. And guess what? You might earn a bit of a yield on your money, because we probably don't get much of a yield in a euro dollar deposit outside of America, because the banks don't actually need your money and they have to pay capital charges because of Basel III and blah, 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 right? All the bad things about why banks don't like large deposits. And so now you have, a 10 to 13 trillion dollar TAM of money that could flow into stable coins from abroad. And once you're in a stable coin, Besson has full control. He knows where you are, which bank. He knows where you're clearing your treasuries. And the best part is he can offer you a yield that's lower than Fed funds. So if Fed funds is 4.5, he can say, oh, guess what? I'll give you 2 on a 6-month T-bill. And you say, well, I can't really do anything about that because I'm not going to go into a US bank deposit. The banks don't even pay you anywhere close to Fed funds. So fuck it. I'll just buy the 2% that Besson offers. So Besson can, in one fell stroke, completely neuter the Fed. And no longer does the Fed have any control over Fed funds, because Besson can offer the treasury bill at whatever price he wants, unconstrained by what Powell or whoever his successor does. So that's the first pillar. And the second is what you mentioned, right? You have a lot of retail around the world in developed and developing countries. I live in Asia, and basically the entire investment game out here in Asia is how do we get local currency into dollars so that they can buy higher yielding assets and equities. That's literally all of finance in Asia. And then every so often the regulators come after people and they basically put the young guy in jail, and the boss stays sweet as they do. And that is the game. So Besson could say, okay, guess what? We're going to deputize Elon Musk and Mark Zuckerberg and give them protection to go and offer a stablecoin bank account through their WhatsApp, your Instagram, your X account. And we don't care if a foreign regulator, whether banking or internet regulator, says, we don't like this. We don't like that you're basically giving a dollar bank account to our entire, underclass or anyone who's not a wealthy individual. And, they don't care because they're sitting in Hawaii and Austin, Texas, and Trump is protecting them. And if you go and you try to remove access to Facebook or X, guess what? Sanctions, just like what Trump threatened with Europe when they had their Digital Information Act or whatever it is. And then furthermore, Besson finally has a sanctions weapon, right? So if you're in Asia or a lot of developing world, all the elites essentially steal from their people and put their money in US banks in some way, shape, or form. And so guess what, president or prime minister or parliamentarian, if you don't allow Western social media companies to bank all of your people with dollars, I'm going to sanction you and you're going to lose access to the billions of dollars that you stole from your people. And so guess what's going to happen? Nothing. And so I think that is how you're going to get, sort of like $20-25 trillion TAM of money that could flow into dollar stable coins. And I think they're hinting at this already in terms of, you have the major social media companies saying, oh, we're investigating stable coins and this, that, and the other thing. And, Besson's very pro on them. And then basically what does a stablecoin do? They're going to buy treasury bills and they'll buy it at whatever yield Besson offers. He can completely destroy the Fed. He can put, short-term rates wherever he wants it. And now he's got a sink of tens of trillions of dollars that he can essentially fund the US government with until they do some sort of yield curve control to bring down the long end. So I think that's what I would do if I was Besson. Now, I think they're on the path. Whether or not they get there, who knows?
Rising costs, fragile monetary policy, and the quiet erosion of purchasing power are reshaping the way people think about money and assets. Digital alternatives are no longer fringe ideas, but increasingly serious contenders for storing value and reshaping the global finance landscape. The clash between political pressure, central bank credibility, and the long-term consequences of unchecked debt makes the next few years critical. The balance between traditional systems and emerging digital structures could determine not only investment outcomes but also the very framework of economic power in the decades ahead. Will the push toward new monetary tools signal the end of old systems, or will the established order adapt quickly enough to hold its ground? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.